market men are of the view that for Indian capital goods sector, the storm has come and gone, and now things could look up. But what is the on-ground reality? Let's do a reality check with Mr. M.S. Unnikrishnan, Managing Director of Thermax. Mr. Unnikrishnan, good morning and thank you for joining us at the outset. Wish you and your entire team a very happy 2014.
Thank you, Nikunj.
Do you think 2014 indeed will be a good year for the sector and for your company, or there are multiple challenges and markets clearly are wrong in assessing that the storm has come and gone for the sector?
Well, let's take it like this. It can't be worse than 2013-14, let's say that. It could be better, it will be better. But it will be felt differently by different sectors in the capital goods. I would take this into two different sections. One is short cycle oriented companies, and the others long cycle or medium to long cycle oriented companies. Short cycle oriented companies are the ones who have equipments manufactured and catered into the industry, where the cycle time from an order to cash process would be between maybe 3 months to less than 1 year. Then there are other sector which is the medium to long cycle, are the ones where an order to a cash cycle would take anywhere from a 24 months to maybe a 48 months. Now, as the economy is going to be better than the previous year, that's overall expectation. I'm talking about Indian economy. Global economy is already quite stable with whatever negatives which were there discounted. But Indian economy is expected to be stable and to become positive thereafterwards. The stability, the companies which can perform better for a 1 year balance sheet are the ones who are short cycle capital goods companies. So they will perform better than the previous year. And the difficulty for the long cycle companies are I don't want to name them, but I'm sure you can make an assumption on that, are the ones where their order backlog or the order book is going to get depleted, and they have to get fresh orders, but which will get executed across maybe 2 to 4 year period, will take a longer period to recover from the current conundrum. So that's the way I would look at 2014-15. So the companies who are medium size, not the very large companies, but certainly listed companies who are in the space of capital goods should do better in the next year. And the other side of the companies are looking forward to having more order intake in the coming year, where new projects are going to get announced. So that's a reality check. Will it be worse than current year? I can fairly with certainty say that no, it will be at least the same way or better for the entire industry for next year. And the real better years, the good years are going to come thereafterwards.
Fair point. Mr. Unnikrishnan, hi, morning, and firstly a very happy new year to you. What about the 269 crore rupee order for generators which you've bagged from a petrochemical company? Share with us what's the time frame, margins of this project, and has any part of it been booked in the third quarter?
That order is for an execution period of 18 months, and we have registered the order. The engineering activity started. Execution of that order predominantly will take place towards the last 2 quarters of next year, and a part of that will also spill over to the year thereafterwards. And these are for steam generators for a petrochemical company which is on expansion right now.
Mr. Unnikrishnan, on a scale of 1 to 10, let's say after Q2 2013, if the business confidence was 5, has that gone to 8 or 7?
Repeat it, because you told me on the 10, is it 7 going to 8 or 8 going to 7? Your question is it going to be better number? Are you asking that way, Nikunj?
Yeah, so if let's say if your business confidence on a scale of 10 was let's say 5, in last 1 quarter, has it gone up to 7 or 8?
Not 7 or 8. It would have gone up by a notch above. If it was say earlier 5, it would have gone to a 6, 6.5. I'll tell you the reasons for it. Capital goods industry can be taking a positive attitude going forward on account of the fact that non-ordering or non-capacity creation of the past 18 months to 24 months, in an economy like India where whatever said we are growing at 4.5 to 5%, you'll be needing to add more capacities. And the unsatiated demand, which is suppressed currently, is going to be surfacing as we move forward. And normally, the time period taken to set up a capacity, whether it is a food or food processing which could take normally a 12 months, or a textile industry could take an 18 months, or a cement company can take maybe 24 to 36 months, and a power plant can take all the way up to 48 to 60 months. So, the decision makers of the country are bereft of the fact, they are already seized upon the fact that, look, I mean, if you do not set up capacity, irrespective of what the sentiments are, you will be losing out your market share going forward in 15, 16, 17, 18. So I would believe, detached from the ongoing political scenario, the Indian industrialists and the multinationals who are operating in India, looking at the increasing demand, would certainly start ordering in every sector going forward. So the ordering will start next year sometime, and each industry, there is a flock mentality. One textile mill starting, maybe 10 of them will stand up in Q2, place orders. Cement will start expanding. All this is going to happen progressively in the next maybe 18 to 24 month period. So that's the time when the intake of orders are going to happen for many companies. And as I mentioned, short cycle orders will get executed at a time period of less than 12 months, so it will have an impact on the next year's balance sheet itself. However, the long gestation period orders will partially get executed in say 15, 16 onwards only. So the balance sheet impact of that will have to be seen in 15, 16. Order intake has got to be seen next year onwards. So I'm quite hopeful that there could be a reversal, number one. Second is, globally there are no more negative cues forthcoming for capacity building. On the contrary, oil prices are quite stable, remaining above $100, which would mean a lot more investment is going to be happening in the existing oil sector, and the new oil sector emerging on the shale oil and shale gas in North America and other countries also will start happening. So oil sector investments, which are very huge in nature, which will have a spillover impact for a selective group of companies in Asia, including in India. So that will also have some impact that you would be seeing. We aren't hearing anything negative about Europe anymore. I think it's already accounted for by the entire industry and the world. And on the contrary, America is starting to build up capacities over there, which will also have a spillover impact in India. So put together, I would believe global cues are going to be good for capacity building progressively. So the companies who are exporting out of India capital goods, and also those who are multinationals where they make the components or maybe part of that in India for the final projects to be completed abroad, would also have a trajectory impact coming to them. So that's why overall I would believe things would start turning around. Now, how this will get translated into the share prices, I'm not the person to predict it, but I do believe that a lot of this is factored already into the pricing of various shares in the market. In my opinion, I mean, it could be too speculative. I'm not the right person to comment on that. So but the ground level realities is what I've commented.
Yeah. So someone should not buy Thermax. You think the Thermax stock is fairly priced?
I never advocate to buy or sell Thermax because we never look at the share market and do any action inside the company, nor do we recommend anything. We are doing all the right things for a bad time. See, we have built up capacity. We've got, excess. I mean, I would say that to take on the next wave of growth, I have all the manufacturing capacities. I already have the team in place. I have the processes in place. So I'm looking forward to the market to turn around to take on my customers. My market is the customers, not the share market. That's where Nikunj, we look at it.